I'm here. Welcome, everyone. Thank you for joining our webinar today. My name is Michelle Dowling. I work for TSYS. I have been in the credit card processing business for about 15 years, and in the last 5 years, I've been specific to the healthcare market and focusing on helping practices really understand how to optimize their revenue cycle management. So today we'll be talking about practice optimization. And this term may be familiar to you, and today we'd like to provide an overview and practical definition of this revenue cycle management and really focus in on the impact to the financial health of your practice. We'll identify key areas where you can optimize efficiencies and workflow while increasing revenue. Unlocking these key concepts will open up areas of new success in your practice. So we know that there are many challenges facing medical practices today, and over the last few months, we've analyzed some of them, including the effect of digitalization and its impact on the practice, as well as how the patient experience can affect revenue and profitability. We've also talked a little bit in the past about how to calculate patient attrition rates, and these are some other topics that in the future we'll dive into a little further. Today, we are looking at the area of revenue cycle management, and we are going to talk through 7 best practices that we can put into place immediately. First, we're going to talk a little bit about key drivers in the healthcare market. We know that the healthcare market is undergoing some significant changes from many different directions. And when we talk about how to put this into context, we talk about things like how high plan deductibles continue to climb. And this affects the likelihood that the office will be paid for services. As sources say, over half of the workers in the country today have a deductible over $1,000. Further, this propensity to pay drops to about 62% when we see this deductible at this amount. And the shift to high-value care is still a new concept for many providers, and they're trying to implement the appropriate systems into their workflow. Advances in technology leave providers often faced with decisions to make in order to boost efficiency while weighing the financial consequences. And all offices face the challenge of payments when we're including how to send an outstanding bill to collections, and research tells us that only 16% of accounts receivable that go to collections will actually be realized. And with these in mind, how can we help the practice ensure they're in line with capturing revenue efficiently in the ways that their patients want to pay? We talk about a cycle, and we define this as a regularly repeated sequence of events. And visually speaking, a cycle is something that creates a complete rotation. And to put this into practical terms, for every single patient appointment, we consider this an event. You must follow this certain series in the same order every time to complete the rotation. And what this means is that when you fail to do so in any given part of the cycle, you can cost the practice money. And to multiply that by the number of patients that you see every day or every week, over the next few slides, we'll talk about ways to ensure the cycle is complete, and that is practice that you're following consistently and repeatable for the volume of patients that you're going to be seeing. In all industries, revenue cycle is defined as the entire customer engagement and payment process from beginning to end. And in its fullest sense, it begins with marketing and client acquisition or patient acquisition, advancing through the provision of services, concluding with payment, and that also includes refunds and returns. And essentially, the bottom line of any revenue cycle is considered how long it takes to get paid in time for a service to being paid in full. In revenue cycle management, or RCM, we typically associate this with the healthcare industry, and it's defined as all the administrative and clinical functions that continue to contribute to the capture, management, and collection of patient service revenue. The reason why I bring this up is because in many cases, we're seeing the effect of what we call consumerism in healthcare. So people are wanting to pay and get access to information in very typical ways that they're used to. and the way they are feeling very accustomed to. And we'll talk about that. And if you can consider this webinar as a checkup to ensure that your practice is following the best practices so that you're considered top of the revenue cycle chain. So RCM describes and explains the life cycle of a patient, subsequent revenue and payments through a typical encounter from admission to final payment balance. And these individual steps are part of the revenue cycle process when you're using the ADS system. Starts with appointment scheduling, goes to insurance eligibility and estimation, at the patient registration and time of visit, moving into coding and claim submission, making any insurance payments and adjustments with subsequent billing, and then finally, patient billing, which truly should conclude the final destination of a completed payment or zero balance. So revenue cycle starts with appointment setting, and appointments are considered potential revenue. And when there are appointments, there is a revenue cycle to manage. And the goal in this step is to set appointments and ensure your patients show up and have a good experience while they're at the office. After scheduling and registering the patient, another important task for the insurance portion of the revenue cycle management is determining eligibility and plan benefits. A benefit of the ADS system is that while you have the patient on the phone, you can accurately estimate what the patient will owe. And then prior to the appointment, eligibility is batch verified. The most significant part of this task is to be able to accurately estimate this portion so you can collect payment, or at least part of the payment, at the time of treatment when the patient's actually at the office. And lack of doing this can sometimes even triple the length of the revenue cycle. And typically this involves a lengthy phone call, if there's an issue, filling out paperwork, and loss of the staff members to take on this task. It's very important to obtain all the necessary data in order to properly bill an insurance company, making this step very important. The patient registration step is key to optimizing revenue cycle management. During this step, employees create an account that details their medical history and insurance coverage, and any errors made within this process is one of the biggest culprits that cause non-clinical denials from insurance payers. So you know that any input on incorrect personal information, invalid insurance benefits or coverage, even misspellings, to name a few. These errors are usually easily identifiable and amendable by submitting a new bill to correct a mistake. But once again, we talk about elongation of the revenue cycle. So getting the most accurate information up front starts here, and this provides the groundwork in which the claims can be billed and collected in the most efficient and effective manner. Next comes the claim submission process, which of course entails a number of steps. And good revenue cycle management means you're submitting claims electronically. Optimal coding compliance results in higher revenues, decreases claims denials from insurance companies. And this involves management of the clearinghouse claims, where electronic claims are scrubbed for errors. But it also means that dealing with potential resubmissions because of inaccurate data or need for attachments. So after seeing a patient with insurance, you create the claims and submission, and it's critical to monitor the status of a claim on a daily basis in order to identify any denials, thus clogs in your revenue cycle management. So a successful healthcare revenue cycle management strategy focuses on these front-end tasks, as we discussed, like registration and accuracy, and helps to move claims along. And as I mentioned earlier, many of these errors that occur in the first stages of the patient registration and account carry through and disrupt claims reimbursement. Once a payment is received from the payer or the insurance company, a new round of activity ensues. If the payment that was received is processed traditionally fairly straightforward, right? You don't have many extra steps after that. However, if there's a denial or, again, an error, and you have to research the payment or the claim and put it all together, this is when we can see a backlog occur. It will take longer for the patient to get to the biller, so that it then elongates the time from seeing the patient to when they can actually pay. And then it also brings up other issues of how do they remember the visit? Do they remember what happened at the visit? So after a claim has been created, it gets sent to the payer for reimbursement. And the practice doesn't need to oversee the task associated with claims reimbursement necessarily, because we are involving posting, statement collections, handling denial. And once the insurance company evaluates the claim, the practices are reimbursed for their services depending upon coverage and the payer contracts. And sometimes these claims can be denied for various reasons, and that anything is not covered by insurance, practices must notify and collect payments directly from the patient. This is a big step, and a lot of activity happens here. In the final step, which is patient billing and payment, if there's a balance due, it's time to send that or communicate that out to the patient. And this process can take different pathways as seen until an acceptable or final bill payment is made. And of course, if there's a difference, you'll have to create an adjustment. And if a patient payment is not received in a timely fashion, further efforts then must be taken to go through a collections process perhaps. And this often takes on paper and time and effort to mail out statements, to go to a collections agency in the worst case scenario. So with all of these tasks involved in managing the cycle, each one represents a potential point of failure. Each patient represents a new cycle, which means those tasks must be repeated numerous times every day and every week. Now what we're going to talk about is how to put into effect successful practice and revenue management. And we're often asked, with such a complex cycle, is it really even realistic to have a smooth process? And if so, what kind of practices manage the revenue cycle well? It may not come as a surprise that in most cases, large practices can often oversee the components of the cycle because they have staff to do so. However, we know that even the smallest of practices can mimic a model that contributes area in this and be successful. The best of the best use continuous process improvement, from looking at the end goal of the final patient balance being zero to attempt to continually shrink the timeline to getting to that final payment. So it's those two components. So we're going to talk about those 7 best practices now. And the first one is what we call card on file. And this is the ability to securely store a credit card that can be used in a future transaction. And this can be very similar to an experience at making a hotel reservation. When you check in, they like to see your credit card because they like to put any future purchases or charges against that card. So they essentially store it and associate it with your account. And in this same situation, we can put a process into place that we can store a credit card for our patient and then charge their account for post-adjudicated balances. Of course, with the patient's consent, or if they call in, you can also ask them on the phone if they'd like to use the card that you have on file. And practice managers often wonder why, if people use credit cards to pay for goods and services from food to clothing, why wouldn't practices expect the same from their patients? So there was a practice in Illinois that implemented this card on file program, and they claimed that it boosted patient collections and reduced accounts receivable by 28% in just as little as 6 months. And while many providers use this program, 20% agree that card on file was the best method of decreasing patient days in accounts receivable. And practices often believe that getting paid for services as quickly as possible is important for their success in cash flow. And prior to implementing the credit card on file program, the specific practice in Illinois stated that they were losing out on much needed patient collection revenue. Sure, we can all relate. The second best practice we wanted to discuss today is what we call an integrated payment solution or integrated credit card solution into your practice's current system. So this includes like a card reader or a device that talks to your practice management system. So in this practice, we interviewed an office manager, and she said that, yes, when we just swipe the card through the system, the integration posts the patient payment right to the account ledger. So not only does the practice get a credit card payment added in the batch, it applies it to the patient account, and then instead of getting just this fraction of a total owed, they're actually developing payment plans and using, between the integration and the card on file, ways to set up a faster, more efficient practice management revenue cycle. So they work with patients that want a patient payment plan and set it up in the software to charge the card monthly. And again, all of this is working within your software. So it makes it much more efficient than the auto posting makes things much more efficient than manually entering cards at the end of the day. That also has a very big effect on rates of error, but it also takes time away from your staff every day to go ahead and manually charge the card and then enter it into the practice management system. And creating a process to take payments, offering payment plans as an appropriate and good use of your practice management system. It will save your practice time, and it definitely will create a better workflow for your staff and for your patient. The next best practice is taking payments online. Allowing payments online and giving your patients options will not only lead to a stronger revenue cycle management, but it enables your patients to pay their bills much more conveniently and quickly. So as we think about the patient, the majority want to have options. They want to be able to conveniently pay. And when we think about this trend of digital technology and embracing technology, this is an evolution and an add-on to the revenue cycle, meaning that 5 or 6 years ago, practices were concerned on how to make bills easier to read. Now we're really talking about how our patients are using their device, like their phones, to manage their everyday lives, including healthcare. And they absolutely want the ability to connect with the practice through text messaging and create easy online payment capabilities. So we know that people are very familiar paying online. So we want to be able to give them all the options that they can, because typically we know they want to contact us when either it's lunchtime or after hours. So giving them the ability to pay online gives them the option to do so from home and gets the practice paid faster. The next best practice is staff training and education, and we can't say enough about calling out that investing in your staff will build a very strong foundation. And it's very important for process improvements to also be communicated and educated amongst the staff. In this fast-paced, multitasking world, we never have enough time to educate. We always feel like there's something else very important to do. And when you're dealing with patients, that's probably very, very true and very accurate, and probably even a little bit low on the scale of the reality of things. But we wanted to stop and make sure that we talked a little bit about maintaining these process flows and making sure that the staff is balanced to handle how it works, so that if there are people who are out, other people know how to fill in for that. This can be a little daunting for some people, but the use of analytics and data can be very helpful in managing your revenue cycle. And oftentimes people are visual learners, so even creating a diagram or document of the steps that we shared in this presentation as it relates to your office and your cycle and what you go through each time a patient comes may be very helpful to set up this cycle and understand all the different people who may be taking on those tasks. But from a provider's point of view, a practice's point of view, using analytics and data begins with reporting and looking at what we call key performance indicators. I'm going to get into that a little bit more in a slide or two. But in essence, we're monitoring this system for timelines and for, again, it's this net zero balance that we're trying to achieve. We don't want your analytics to provide only a rear view look. We don't want to be looking at the past. We want to be using this data so that you can make good decisions on what areas need improvement and what areas are working. So using a key performance indicator or data will track the health of your revenue cycle, and we're going to talk about exactly what that looks like. So these are the steps elongated, and what we're trying to say here is that it's the consistency that we really want to talk about today to make those routines run so that they're efficient, but also consistency often breeds just very specific processes that if you checklist them off, you're doing the same things and you'll be guaranteeing good results. And again, we know that some of these other issues crop up. It takes us away from the manual work. So when we talk about ways to help, we want to look at automation. So providers that have benefited from automation, either A, we take out a lot of the human capital time, and B, we also eliminate the use of paper. So technologies can be expensive, and when you can offset that by having your staff delegated to doing other things that are important in the office, or reducing your expenses like on stamps or printing, these are ways that you can offset any type of technical or technology advances or enhancements. And many times your practice management system may even have the capabilities to automate some of these pieces that we just talked about. It's worthwhile to find out what happens and what you can possibly do to tweak things and offer additional programs in the claims or forms areas. So when you think about strengthening the revenue cycle management and shortening the timelines, embracing technology from within is key. Having platforms that seamlessly facilitate these tasks in the revenue cycle is very important. We know that we want to avoid bad debt. We know that we want to avoid long times in accounts receivable. And there is definitely a lot to that. And when we talk about it, we want to shrink the cycle. So these are some specific activities and tasks that I want to bring to your mind that you can quantify and analyze, as we talked about, looking at key data points and measuring. So we're going to go around the circle here. In payment facilitation, look at how long it takes for the time the patient comes in for service to when the claim is actually filed. Can you cross-reference the charges billed against the schedule to make sure there's nothing missing from previous appointments, or even what is your consideration of clean claims? How many things are being kicked out? How long does it take you to get reimbursed? And does it differ between payer or insurance company? And does a particular payer seem to deny more than others? Are there consistent issues that are creating those denials? And then going over to accounts receivable, I'm sure most people know it takes a long time to get paid, but do you know what rates your accounts receivable is at, and what balance is going towards collection of your total? And then statements and billing is how often are you sending them? And again, going back to an option of can your patients pay online, and that helps speed up the process. To wrap up the whole revenue cycle management cycle is to say that practices we know want to remain profitable and that's an indication of success. And if the cycle is long, the cash is sitting in someone else's bank account instead of yours, and it's taking a long time for the practice to get paid. And the greater the cycle in time and length, the likelihood is higher that you'll write off some of those fees and not recoup them. Conversely, if the cycle is shorter and you receive payment faster, you'll increase your revenue and see the financial health of your practice. Faster payments mean fewer collection problems and fewer write-offs. And we hope today that we were thoughtful in how to prompt you to shorten the timeline, ask some questions about the different steps that you're taking between when the appointment is scheduled and when treatment is rendered. So we'd like to open up the line for any questions.
Okay, we have a number of questions. We're never going to be able to get to all of them. First of all, Michelle, thank you for doing that presentation. That was really great. Somebody wanted you to just clarify again, can patients make payments by phone?
Yes, oftentimes the practices can take a card over the phone if they need to. I would highly recommend being very careful. There's a lot of information about how to handle credit cards securely. I would highly recommend, therefore, using the card on file so that you could get a form signed by the patient that says they can use a card and you can store a card securely online and use it that way to be the most safe with that type of information.
If a patient wants to make a payment using a gift card, let's say like a Visa gift card or a MasterCard gift card, is that something they can do?
So oftentimes, if a card has a Visa and MasterCard logo, you could use that anywhere. So I believe you can. I don't think that there would be any issue at the practice. You would know right away, though, if you put it through, if it wasn't an appropriate form of payment. But typically with the Visa MasterCard logo, those are accepted.
All right, Michelle, thank you so much. And thank you, everybody, for being on the call today. If you see on the screen, you can grab our contact info if you have any follow-up questions or want to get in touch in any way. Clients who both use our software as an in-house system or who use our RCM company, our Medix RCM uses TSYS as well for credit card processing. So on that note, thanks again everybody for being on the call, and we will look forward to being in touch.